during the. So let's get started. Obviously, we are missing Karen at the moment. Karen is either in Australia or New Zealand, I'm not sure, but anyway, she's actually getting some well-earned leave. Other than that, I think we've got most people joining. Slightly different meeting today. Obviously, you know, we gave you a lot of homework to do in terms of ED2. Looking forward to seeing everybody's comments on the draft, exposure draft. And just to say, one of the things that will help us in finalising that is the fact that IPSASB actually gave approval to its new revenue standard IPSAS 47 and the transfer expenses standard IPSAS 48 at its meeting in Washington. So that at least provides a stable platform to the extent that we want to use that in ED2. In terms of today, we've got 2 items on the agenda: supplementary statements and then second discussion on foreign currency translation. I think the first item is particularly important in terms of both what may go in ED3, but also in terms of the implementation of the guidance. I think it's a really exciting piece of work. I want to welcome somebody who most of you won't have actually met before, but Siam Borkosh has done a fantastic, has contributed a huge amount into this piece of work. And so she's actually going to lead us through the discussion. So Siam, welcome, and thank you very much for the work that the Supplementary Statement Working Group has done. If you can pass the thanks on their behalf. But over to you just to sort of lead us into the discussion. And it's a rather different type of discussion for the group, but very important we get your views, because as you'll see from the papers, it raises a number of quite interesting issues, both technically and tactically. So Siam, over to you.
Thanks very much, Ian. Hi, everybody. It's really such a pleasure and a privilege for me to be here today with you and to have had the opportunity to work on this proposal for a supplementary statement. As you know, the Supplementary Statement Working Group has been working on this proposal since about November last year, and I really want to thank Jeff, who's here with us today, who is a member of the Supplementary Statement Working Group and who's very, very diligently reviewed quite a lot of my work. So thank you so much for that, Jeff. So by way of background, just as a reminder to you all, I'm just going to spend a minute or two just making some framing remarks and then hand over for the questions. But by way of background and as a reminder, what the Supplementary Statement proposal is trying to do is to provide useful information to users of the INPAG accounts, whilst also reducing the reporting and audit burden on NPOs, which arises from donor requirements, which we know are myriad. They're a real fact of life for NPOs. The paper pretty much tells you what you need to know, but by way of just introducing it, I'd just take you to section 3. Which contains the key principles that we've adopted in preparing this supplementary statement proposal. Firstly, the statement would be about a set of specified activities, and the NPO would specify those activities clearly when developing the statement, and would include the financial transactions that relate to those specified activities in the statement. It must and it should be useful to the primary users of the accounts to merit any place in INPAG. And we do think it is useful to the primary users of the accounts in the sense that it conveys some reporting about, some more detailed reporting about the specific activities of the NPO. It conveys something about the capability of the NPO. It provides far greater assurance around the financial management of grants by the NPO. It would be optional for NPOs in INPAG, so it would not be a mandatory requirement in INPAG, but donors could actually require it as part of their grant terms. They could actually say, in preparing INPAG accounts, we would like you to also prepare a supplementary statement in relation to our funding. We've prepared a core format for the supplementary statement, which you can see in the paper, which would be mandatory. That's the proposal. That core format would be mandatory and would be consistent with and reconcilable to the general purpose financial statements, which you know, the points around how it would be consistent and reconcilable are laid out in section 3.4. I'm not going to repeat them here, but this core format would be entirely aligned with the general purpose financial statements. We're proposing that should an NPO prepare a supplementary statement, it would be positioned after the primary statements and not sort of in their midst, causing any confusion. And that a supplementary statement would have its own notes, some of which would be mandatory and others of which would be optional. In section 4 of the paper, we've raised some special issues that arise as a result of, I guess, the deliberations around this work. I'm not going to go through them in detail, but they relate to the merit of including a movement in funds note in INPAG, which we think would massively strengthen the assurance and transparency that could be given via the supplementary statement in reporting on funding. We make some proposals in relation to the presentation of support costs, which are the term that we're using for indirect costs, as you may know them. We make some proposals for some additional column headings, i.e. some variations, which could be included alongside the core format. But the main point around this is that the core format itself is mandatory. And we also propose in 4.7 some ideas around the extent of inclusion of the supplementary statement in INPAG, depending on, I guess, you know, the ultimate view that's arrived at about its utility and its fit with INPAG. So whether it would go in INPAG or in an annex to INPAG or in separate comprehensive guidance. We have actually gotten feedback from the Supplementary Statement Working Group, the Donor Reference Group, and the PAG, and the majority in each of those cases would like to see the supplementary statement either in INPAG or in the annex. So Ian, I'll stop there and hand back over to you for the questions.
Great, thanks, Sim. I think that gives a very good flavour of you know, partly the work that's gone into getting the proposals thus far, but I think also you know, it shows that there's a number of kind of tricky issues that we've got to weigh in terms of you know, both the content of INPAG guidance but also more particularly what goes in core general purpose financial statements, supplementary material, variations on those themes. So there's a lot of different you know, different issues that we need to work our way through. So really what we wanted to do today was at least get some initial reactions from TAG to some of those issues. So we'll just try and pick up sort of comments as much as we can, and then that will give some further food for thought in terms of positioning part of ED3 alongside ED3 and so on. I should just say, if you hear noises off from my end, drilling, sawing, we're having windows replaced at the moment, and I've got 4 men working in the house, so apologies. I will try and keep myself muted, you know, to minimise any background noise. So if we can go first to question 1, which, as Sim said, is really the sort of issues raised by section 3. And I think maybe what I'll do is I'll just open up for comments on any of the matters in 1A, B, C, or D, just to see you know, what people's views are on that. On those issues there. So those are the kind of, if you like, core issues. So Belaine, lead us off, please.
Thank you, Ian. Before we go to the question, I just have one clarification. I look at paragraph 3.2 of the paper, which states that while not necessary for providing a true and fair view, I'm not sure where we're coming from, because I'm quite disturbed, because be it supplementary or whatever, our objective is to provide useful information to primary users. And whatever information we present in the supplementary statement should be consistent with, you know, our primary financial statement. So I'm not sure whether the right words to use, not necessarily providing a true and fair view. Thank you.
Okay, thanks, Li-Ling. I think that's helpful. So if I go to Catherine and then to Jenny.
So I guess just my comment is related to the point around the headers for income and expenses being the same as the financial statements. And I wasn't sure whether from a materiality perspective, there would actually be an expectation that this statement would be a bit more granular than what you would see in the financial statements. So there might be a nuance there that you need to have sort of subtotals that tie into the financial statements or something like that, as opposed to having just at the highest level. The same captions, and that kind of ties into my second point around materiality. And I know that we're not getting into an audit discussion, but I think as a supplementary statement, there might need to be some clarification around what sort of materiality you do apply when you're determining the, you know, line items, nature of disclosures, that type of thing, that we need to contemplate. Is it the same as the financial statements, as a supplementary statement? Is there a different materiality that you would apply in calculating, you know, similar to how you would for financial statement materiality? I think that's just something that needs to be considered.
Thanks, Catherine. I think that audit point is actually, you know, one of the things that definitely does need to be addressed separately, because there's that whole audit opinion coverage, nature of opinion, possibly separate compliance opinion or something like that. So there's a number of issues nested in there, I think, which, you know, the suggestion is that there is actually a separate discussion on that, although we do pick it up marginally later on in the paper. But I think, you know, we've logged that, but that's actually going to be one of the important things that might actually determine how we approach this, both from a guidance point of view and a presentational point of view. Jenny.
Thanks, Ian. Yeah, I think I probably missed the earlier discussion on this because I had to miss that meeting in September. So perhaps there's some bits that I'm not, you know, quite as familiar with. But I suppose I had some, you know, it's obviously a tricky issue, and we know that donors want this information, but you wouldn't necessarily see information at this level in a general purpose set of financial statements. And so, yeah, there is a sort of a slight tension there, isn't there, between this, which might be special purpose information. I wondered, one thing that wasn't clear to me was whether this was, where it was provided was part of the financial statements, or whether it was other information in a document that contained the financial statements, and that bit wasn't clear. But I wondered whether what we were really trying to do was a form of segmental reporting, of optional segmental reporting, because one of the, which obviously segmental reporting we wouldn't expect for entities that are applying the IFRS for SMEs standard, which we've used as the base. But one of the things I was wondering about was, you know, if an NPO's picked out, you know, one or two projects that it's going to provide this information on, how, I know we've got that reconciliation proposed on the movement in funds, but from an income and expenditure perspective, you know, how would you be assured that there wasn't any doubling up, so that to the extent that part of an activity might be funded through general donations rather than specific donations, you know, how would a user be able to see that that it all sort of added up to the total, rather than and similarly with the support costs, that you hadn't ended up allocating more than the total costs. So there was something for me there around that sort of completeness, and I'm not sure that a movement in funds necessarily covers that. But perhaps these have been discussed previously and I've missed it. Thanks.
Thanks, Jenny. So I'll take Daniel's comment, and then Siam, perhaps I can go back to you just to sort of respond to the points that TAG members have raised. Daniel, to you.
Good morning, everybody, especially here, there in London. Yes, I have some of the same concerns about this. Specifically, what would be the relationship of this supplementary statement with the use of fund accounting, and how does this information could be reconciliated with that contained in the financial statements? I'm also concerned about the assurance of this statement, because I think even though this is supplementary information, it could be confusing for the primary user of financial statements about the reality of the accuracy of this information. So I think it could be submitted to assurance in the same way of primary financial statements.
Thanks, Daniel. Siam, do you want to just sort of respond to those points that have been raised?
Thank you, Ian. I'll respond to the ones that I can respond to, and Sam might want to add a few words as well. So the first point was around this this statement around it's not necessary for a true and fair view. I mean, the reality, I'm sure that different words can be found for that paragraph, but the reality is that the statement is optional, and so therefore we can't categorically say that it's necessary for the provision of a true and fair view, because it is optional, and NPOs can choose not to prepare one for any of the grants that they receive. In terms of the income and expense headings, thank you, Catherine, for your comment. In fact, buried in the detail, which we didn't present here because obviously there is quite a lot of detail behind this, there is, and I'm sure Jeff could also speak to this if we needed him to, because Jeff, you raised the same point in the supplementary statement working group. There is a provision that allows NPOs to unpack the income and expense headers further in a note or either on the face, as long as they are properly nested within the headings in INPAG, and you can clearly see the relationship between the headings in the supplementary statement and the headings in the INPAG, in the general purpose financial statement. So Catherine, thank you. That's a very good point, which we have tried to reflect in the guidance notes that have been drafted for the supplementary statement. The question on materiality is a good one, and I'm no audit expert. I have to say, the last time I had anything to do with audit was in 1994. So apart from being audited as a finance director, so I'm not going to make any comments around audit. Although Sam, you might want to jump in. I think the question of materiality is quite important, and I think it might be helpful to have some guidance to NPOs, or for NPOs themselves to come up with their own rules around when they would agree or decide to prepare a supplementary statement. Like if a grant consists of 0.5% of your income, you may never want to prepare a supplementary statement for it. So I think the materiality question is very relevant and does bear further examination. Jenny, thank you also for your for your points. There is a tension, I guess, between the level of detail that we want to provide here and the reality that sometimes it will be more suitable for the NPO to prepare special purpose financial statements and a special purpose audit for a donor. And I think that need for a special purpose audit will still continue to a certain extent, where donors, for example, don't want to use or are requiring a format that is different from the core mandated format. There are always going to be donors that, at least for the foreseeable future, that don't want to fall in line with the, I guess, the accepted and standard way of doing this. And NPOs, if they want to take money from those donors, will have to service those donors' needs. But the point I'd make is that's happening all the time now, because there is simply nothing for donors to coalesce around. There is simply nothing for donors to pick up and say, this is the accepted and standard way of doing this. I don't need to design my own system. I don't need to design the format of the report I want. I can just use this global, accepted, international means of accepting, seeing reporting on our grants. And without that point of coalescence, donors are, to be honest, just making it up themselves. And so even if there was still the requirement to prepare special purpose financial statements and audits because of donor requirements in future, we would at least have, we'd be no worse off than we are now, and we'd be better off in the sense that I think quite a few donors would begin to coalesce around the standard, which I think really is the prize that we would like to win. The question you asked about whether this would be other financial information in a report with the financial statements is a really good one. I think there was a good discussion at the SSWG and especially with one member of the SSWG about this. At the moment, the intention is that the supplementary statement would be included at the back of the primary financial statements rather than in an other report. But I mean, I guess that's something that could be discussed depending on the decision that gets made around whether or not the supplementary statement would be included as other comprehensive guidance rather than as part of INPAG or an annex. Again, also very insightful point that came up at the SWG around, is this really akin to segmental reporting? I suppose it is, and there is a version of the supplementary statement where an NPO could include every major grant in the supplementary statement, each as an individual column. That would be a very, very powerful presentation of its income and how it's used its income. I personally am very excited about that presentation. And that really would truly be akin to segmental reporting, because it would address the entire transaction base, I guess, if you like, of the organization. The point about doubling up, this is already like a huge risk in the sector. At the moment, donor reports are completely disconnected from the annual accounts and audits, essentially, of the NPO, in the sense that they're done at different times. The NPO prepares a standalone report for the donor. An auditor comes in with a very specific remit of simply reviewing the transactions that exist within that special standalone report, and really is not obliged or can't really check whether or not where those transactions appear in the wider ledger of the organization, and whether or not they have also been charged to other funding sources. The fact of undertaking all of this work at the same time as the annual audit, and linking the financial transactions that make up the supplementary statement to the ledger which is being audited, I think actually reduces the risk of double counting and lack of completeness and duplication really quite considerably from the situation that we currently have. Of course, it can never be fully eliminated, but I think it does reduce the risk. And then lastly, Daniel, thank you for your comments. I hope I've addressed some of them in terms of what the relationship is between the information in the financial statements and the information in the supplementary statements. This is essentially both be sourced from the same set of books and records. And the concern on assurance, I agree. I don't necessarily have the right answer, but I do think that there are some quite big points that need to be reflected on in the way that assurance works for the supplementary statement. Sam, I don't know if you want to add anything to that.
Ian, with your permission, just three short points, if that's right. So on this point of optionality and general purpose, so the purpose of that phrase was to say you can get a true and fair view of the entity as a whole without the supplementary statement. Therefore, it's not necessary to get a true and fair view of the whole thing. And that's why it can be optional. So it's not optional, therefore it's not necessary. It's the other way around. It's not necessary, therefore it can be optional, rather than you must prepare one under certain circumstances. It's not essential, but it is useful. It's not like it's not relevant or not meaningful to general purpose users, but it's not essential for the big picture true and fair view. So that's where we were coming from with that. As Siam said, if there's a need to rephrase that so it doesn't create warning bells, all well and good. The second thing was about, and I'm sorry I dropped off partway through some of the comments, but Jenny, you mentioned about how one set of activities, a discrete group of activities, might be funded from restricted sources and unrestricted sources. And how do you see that? And that's one of the alternatives in the presentation is here's a set of activities, here's a column for the bits that are funded by restricted, here's a column for the bits of those activities that are funded by unrestricted, adding up to give the total cost of those activities with their respective funding sources. And that's also incredibly powerful, especially, I mean, coming to foreign exchange and things where some of the Forex loss associated with those activities and the grants have been funded from unrestricted sources. And you get a much sort of better picture across the board. Then the last thing I just want to mention briefly is that this alignment between the expenditure classification that's coming up in ED3 and this report, the supplementary statement, this is really put forward as a first shot at what we hope might enter the conversation about the ED3 classifications. It's drawn from work that's happened with many donors over the last 4 or 5 years. So we know it's a set of classifications that a lot of donors would feel fairly comfortable with as they are DRG members confirmed. That doesn't mean it's stuck with that. So if there's ways to merge them, that certainly would be ideal. So let me stop there. Thanks, Ian.
Okay, thanks, Sam, and thanks everyone for those comments. I mean, I think it shows why this is a really crucial strategic issue as well as a technical issue. And I think to the extent that actually there can be agreement on particular issues and they can be brought into impact, then that clearly starts to address the fundamental reason why we're doing this project, which is actually to get agreement on what are the core requirements for a set of non-profit financial statements internationally. I think it's very interesting, the points about connectivity with the supplementary statements and how we get that. And in a sense, actually, personally, I see that as almost like a future agenda. To the extent we can't get agreement on what goes into impact, there's a series of issues there which actually further debate and discussion is required on to hopefully gradually coalesce and get people agreed on approaches to those issues, and that's potentially almost like part of the forward work program. And then I think the other issue is this strategic issue from an audit perspective as to what's the nature of assurance that could be provided. Is it some sort of preparation, properly prepared type of opinion or whatever? And I think there's certainly a specific piece of work that needs to be done with the audit community, and that brought back into the discussions before we take some decisions then on how all this shakes down. So I think that's been a really helpful discussion. Freddie, I'll take a comment from you, and then I just want to walk through some of the other issues. But also what I would say is if there are further comments and further thoughts that people have on what's in the paper as a result of the discussion that we have today, please can you send them through? And maybe Sam, if you can act as the sort of focal point for further comments and questions from people, because this isn't the last we're going to see of this, but it's very much important we have the first discussion today. Freddie, to you.
Thanks, Ian, and very quickly, and I agree with the points raised already, but picking up on something that Siam mentioned and you just raised on assurance, if this would be somehow implicitly or explicitly part of financial statements prepared in accordance with impact, it may actually be driven into the assurance world even inadvertently, because if there are already requirements in the jurisdiction, audit these financial statements prepared by impact, if this is in some stealth or non-stealth way part of those financial statements, it may be subject to audit, even if it's not explicitly required or mandated through our guidance.
Yeah,
and that's now discussion happening, for example, with sustainability, whether that's part of the financial statements or not, because it may be then automatically subject to audit. Thanks.
Yeah, and all of this has, clearly has that cost impact both on assurance costs, but also on the additional requirements and burden placed on the reporting entity itself. So if we can just sort of walk through the other questions, and I want to move on now to question 2 and see if there are any specific comments anybody has on the proposal in terms of the movement in funds note. Let's see if there's any comments on the proposal there. Yeah, Jeff G.
Yeah, thank you. Yeah, sorry, I just wanted to ask, so Jeff M is not here on the call this morning. I can't see him. So he asked me a question yesterday that I didn't know the answer to. So I just wanted to put it back to the team was, if you choose not to do a supplemental statement, would the movement in funds note then, be required? And I thought that we were, as a working group, we're sort of advocating for having the movement in funds note, always there. And then obviously the impact note would be the additional supplemental statement would be optional, but just something for maybe CM and Sam to think about.
That was the intention, Jeff. Yeah, that it would be a standard requirement with impact, with the optional extra information that links into it.
All right, thank you.
And I think that sort of, kind of links in with Freddie's point, actually, that by including it within impact, then that would come under the audit report on the main general purpose financial statement. So that is an issue. And I think, part of the discussion then is if we propose to include something like that note, at what point does that actually start to cause either significant additional costs for preparers and/or the core audit, if I can call it the core audit appointment? Freddie, back on that.
And on that, what I wasn't sure, and basically maybe goes back to Jenny's comment or question on completeness. If I have 5 programs within that note, but then there's only one supplementary statement for that one program, does it do anything to risk of double fraud or double funding? Because if I don't have assurance or further evidence about the other 4, I can still fund the program that I prepare a nice statement and reconciles with one line in the movements of the funds. But there may be something going through other 4 funds that no one looks at it. And the question is, generally split by funds and segment reporting, how burdensome it is for those not-for-profits we are talking about.
Thanks, Freddie. Sam, do you want to come back in on that?
Well, yeah, I also haven't done auditing for a long time, but nearly all the auditing I have done was on non-profits. And that note is one of the first things I audited, always. And you get so much assurance. That would be my starting point. Okay, balance sheet, sure, but that note is the next thing I would audit, and it's the way into everything else. So I think it's, even if you haven't got a supplementary statement, the fact that you do have to provide opinion on that note is incredibly powerful and gives you huge comfort as an auditor.
Thanks, Sam. Okay, not seeing any other comments or concerns on the proposal at the moment. So perhaps if we then go on to question 3 on the support costs. Any specific points on question 3? Okay. And then question 4 on mandatory requirements in terms of format. Yeah, Freddie.
Yeah, it goes back to, if this is not general purpose and therefore it's a special purpose, should we mandate? Because are we saying that we know the needs of the specific users better than themselves? And if it's mandated as a core format, is there any flexibility? Because then if this is a global guidance, is it really gonna satisfy needs of all grantors around the world? And then to what extent it's flexible within that core format? So just doesn't seem to me global guidance, principle-based, and a mandatory format, something that is really close to rule-based, and no flexibility there may impact the uptake.
Thanks, Freddie. I mean, I think that's a good question. Any Siam or Sam or Jeff even, any sort of, you know, reactions that have come out of either the supplementary statement working group discussions or perhaps donor discussions, or, you know, because obviously the reaction of the donors is really important. Any thoughts on that?
Yeah, I can come in here. I think, firstly, to point out that there isn't a lot of flexibility in the core format. So the core format is not flexible. What's flexible is the sort of columns that can be added to it. So if you want to add another currency or a budget or a different funds that are also funding the same activity, that's where the flexibility is. It's in the other columns that are added in rather than the core column itself. So I think that flexibility piece really we've tried to handle by the core one being not flexible. I think this issue of mandatory, so part of the reason that we didn't want to make it mandatory under certain circumstances is also part of, some of it might also be tactical, like we've got an end game where we want all donors to be lined up on one thing. And maybe that's something that we can achieve in 10 years, but it's not something that's going to happen in 2. We have to produce the format and give time for donors to align up to it. And if we make this mandatory too quickly, it could all break. It needs time to have a little bit of wiggle room for things to line up. And so I think that there is a tactical element to it, as well as well, you don't need it to make sense of the whole. So I think both of those things are true simultaneously.
Thanks, Sam. So I think that underlines that whole messaging point is going to be really important. And I think also, you know, in putting this out for comments, I think some sort of equivalent to basis of conclusions, explanatory material is going to be really important to actually capture the essence of what you've just outlined there. Tim, I think you were first. Anything you want to add, and then to Siam, and then we'll move on to the next point.
Yeah, I think it's just adding to what Sam's saying. I mean, there's a big dose of pragmatism around the route that we have to chart through this, because I think what we're saying is if the donors' requirements are so far cannot be accommodated within what we're proposing, then they are probably going to still be requiring special purpose reports. And that's kind of and that's, if you like, that's the status quo right now for many of these donors, which has its own audit burden and cost burden, both for donor and for the NPO. So we can't solve for all of that. If you really can't get it, your needs met as a donor via this, then you're going to ask for that additional one. But then going back to Freddie's point, is we're really trying to make this explicit to donors that if you do that, then you actually have exposed yourself to much more risk of double funding type frauds. And my own war stories are, I've seen those audits of both the organization and of projects and found massive frauds in those settings, because and the fact that all this money was being spent on auditing and yet no assurance was being provided just seems to me, you know, a sort of a real problem in the sector. That this is part of why we initiated the whole IFR for NPO. You know, this is one of the problems we were seeking to solve through this initiative. So, but we've got to find a pragmatic route to delivering that objective, because we can't require that the whole of the world move to a kind of single audit act, which is how they've dealt with it, for example, in the US jurisdiction.
Thanks, Tim. Siam, then I'll move us on.
Thanks, Ian. I'll be very brief. I really concur with what Tim's just said, but if I've understood, Freddie, your question in the way that you framed it, you said I mean, if this is special purpose, should there be a mandatory format? And the idea is that the supplementary statement would be linked to general purpose accounts, and that donors would over time accept a general purpose statement rather than a special purpose statement. And given that it would be linked to general purpose accounts, we felt that you know, a clear layout that's mandated for the core format was quite important, in the way that there will be a clear layout for the primary statement, I guess, in INPAG. Obviously, if it was entirely a special purpose report, then yeah, mandating the core format would make a lot less sense. So as Tim said, the idea is to give the NPO and donor world something to coalesce around, where people can accept this as a standard, can use it as a standard, and can reduce over time the volume of those exceptional special requests for special purpose reports, which are currently not exceptional at all. It's just what every donor is doing. So although we can't cover every scenario in the future with this, we feel that we could still over time hugely reduce the burden on NPOs in terms of how they meet the requirements of their funding.
So thanks, Jan. So I think, you know, that again comes back to what the status of the guidance would, you know, the supplementary statement would be, what the status of the guidance would be. You know, for example, if SASB has a standard on the statistical reports, if you want to bridge, you know, then do it this way. So it's not a mandatory IPSAS, it's a kind of, if you're going to do it this way. And I think that's getting that sense of you know, what would be required and how firm the requirement would be is something we're going to have to work on. And I think one of the next conversations has to be with the audit community around this, and then we can start to work out what fits where and quite how we signpost to address the points that have been made. Daniel.
Just a little comment. I say it's the flexibility is a very important point here in the configuration of this part of the guidance. So my question is, what about the comparability of the information? Because because of the flexibility, it could be changed the way of present information. So it could be useful to say something about that. Thank you.
Yeah, thanks, Daniel. And again, I think that's another manifestation of the multiplicity of requirements at the moment, because the more something is a requirement of the core INPAG and therefore the general purpose financial statements, then that drives towards comparability. But the more that stuff has to sit in the supplementary statements, then actually, as you say, that's you know, that's not only an additional cost, but that's unlikely to be comparable other than between different donors or accounts prepared under the requirements of different donors. So it is a really complex issue. I'm going to move us on, just mindful of wanting to get a good discussion on the foreign exchange part of the agenda. Question 5, I think, is we've already actually walked around the number of those points. What it does do, what the text you know, so I think probably we'll move on over that. Then we're on to the location of guidance, and that's where 4.9 and the table underneath that gives some, you know, some indication. Are there any sort of particular points that people, you know, cause particular questions or concerns there? Because I think we are going to have to come back to this in the light of the bigger picture issues. And then I think question 7 is around the assurance side. And I think as an opening comment on that, clearly this is an accounting standard, so we're not going to be able to say anything on audit in here, but inevitably we need to find some way to communicate the impact that the dialogue has had with the audit community. and that may well be in the basis for conclusions, I think, possibly. Any other thoughts or comments that the Secretariat need to pick up in developing this? Yeah, Phil.
I would just say it's still very early days because we've only begun the analysis for exposure draft 3 and classification of expenses and fundraising costs. The feedback from respondents was very much they would appreciate classification by nature and function, and the inclusion of fundraising cost potentially as a sort of activity. So that the logical sort of follow through of that is that what's in the supplementary statement could form part of a functional analysis of expenses, and issues around, say, support costs, allocation of costs, allocation of fundraising is all going to be tied into one broad, large discussion on how we go about classifying these things, what support we provide for allocations, whether the things in the supplementary statements form part of functional activities or whether there's something different. So just to bear in mind that this is going to have a much broader resonance into what's going into the main financial statements. So the issues we're dealing with now, just on the supplementary statement, I think we'll be very much coming back to on the main financial statements. And we need to bear in mind any questions, because the supplementary statement in a way is leading the way on the analysis that we're about to do. So the kind of responses you can provide now to this are going to be very useful as we get into the nitty-gritty of what's going in the main financial statements.
Thanks, Phil. So at this stage, any further comments from TAG members? I think, you know, there is a lot to absorb here. And I think if, you know, following on from the discussion today, if you've got further thoughts or questions, concerns, if you can communicate those through to Sam, I'd say, you know, let's say, Sam, by the end of next week, is that okay? And then we can collect those, because I think, as Phil said, you know, there's a lot of different things that we're going to have to bring together. And I think one of the questions that the Secretariat are going to have to work through is what's the sequence in terms of how we drive the decisions and get things to settle down. So this, as we've said, was very much a first proper go around this. In bringing ED3 together, we're going to need to keep coming back, and we're going to need to keep iterating, and we'll be bringing in feedback from those two other groups, I think, as we go through this as well. So it's where the power of having the practitioner advisory group and the donor reference group is going to come to the fore, I think. And then inevitably it's going to come into the questions that we ask around ED3 and what we put out as well. So a lot of different things we're going to have to bring together. Okay, nothing further from anybody on that. So I think, you know, just to underline, Sian, thank you tremendously from us as a group for all the work that's gone in, Jeff as well, and Sam, I know, you know, you've driven this, and a lot of other people have contributed their knowledge and their experience into this. I think it's fascinating because it really does go to the root of why we're doing this, as Tim said. And the question is, how much movement can we make towards coalescing all these various different issues? So great work so far. Thanks for all of that. And watch this space as we bring back further discussions and moving through ED3. Okay, so with that, we then move on to the illustrative examples which Nigel has developed for us. And again, a lot of material here, I think really helpful in terms of understanding the working through. Nigel, I just sort of, as Siam did, if you want to make any introductory remarks, and then perhaps what I'd suggest is we just focus on slide 4, which is the sort of proposed way forward, and we'll just walk through the points there and see if we get any, you know, questions raised as we go through each of those boxes, and then we can drill down as necessary. So, Nigel, any sort of introductory remarks from you, Christoph?
Yes, thanks, Ian. Just very briefly, hopefully everyone can hear me okay. Great. So just as a reminder, foreign exchange was added to impact because it causes a number of challenges for MPOs, but in particular, which is relevant to this, when exchange rates change, then it can impact and cause additional costs to be incurred or less costs to be required sometimes. And therefore gains and losses, if you wish, against projects that are related purely to donations and restricted fund requirements. It adds a lot of complexity from the session of some preparers. And then lastly, reporting issues with the donors often reporting in different currencies and that whole sort of reporting issue. So within section 30, it was agreed that would follow the basic principles of IFRS 4 SME when we applied that to G30. But the key accounting issues being addressed are how does that impact the way that it is recorded in restricted versus unrestricted segments, if you wish to think of the segments, and that also ends up driving the approach you take ends up driving sort of which lines are used as well, and how things are classified, which follows from some examples I showed. So there's a huge number of potential scenarios when I've sort of worked through it, and I've tried to capture the key principles within 3, and ended up looking at 2 approaches, which is option 1 and option 2. Option 1 is, broadly speaking, the option that was presented at the last TAG meeting. It's been modified a little to present movements in gains and losses rather than in foreign exchange gains and losses. But other than that, I think it's essentially the same. Option 2 is completely new to today, to this presentation. And in summary, option 1 mostly tends to put changes in the amount that needs to be spent as a result of has been recorded in unrestricted income areas, and the offset to that being in gains and losses. And as a result, there's the impact of changes in rates is seen through the gains and losses line, whereas option 2 tends to impact the restricted column for revenue, and the expenses in both cases are always, and whatever is spent on the project is recorded in restricted expense. That doesn't alter, and therefore the net impact of option 2 is really seen through the transfer between reserves. There are no gains and losses at least in this aspect that we're looking at. There is, if you look at monetary items, of course, and those are the kind of standard FX gains and losses. So we then have the sort of 2 examples being presented or worked through in scenarios 1 and 2, and the proposal, as you say, Ian, is which is option 2, is set out in slide 4. So I can go through slide 4, but I'll take a pause there to see whether we want to go to comments first, and I could kind of pick up on slide 4 as we go through comments, maybe.
Okay, thanks, Nigel. Sian, I just wanted to check whether there was anything you wanted to say, because obviously there is an interaction with the supplementary statements, and then I'll just open up for any general reflections from TAG members.
Thank you, Ian. That's very kind, and also a huge thank you to Nigel, who's taken the time to meet with me on the variation of how the donor currency version of the supplementary statement would work, and has given me some insight into this as well. So thank you so much, Nigel. I read this paper very carefully, and there are really only 3 remarks I wanted to make. So firstly, looking not at all from a foreign exchange technical perspective, but much more from an NPO perspective, I would really concur that option 2 is a better and a fairer presentation of actually what's happened in the finances of the NPO. So I would really concur that this proposed way forward around option 2 is preferable. The second thing I'd say is I completely agree with Nigel about that it's not practical to include guidance to cover all eventualities, because I too have many scenarios coming out of my head in terms of looking at this. I just wonder whether it might be good in the implementation guidance to give some consideration to 1 or 2 illustrative examples that might, for example, cover a situation where an NPO actually retains the asset in a foreign currency bank account. Look at the examples currently showing are where the income is translated directly into the functional currency of the NPO, but NPOs very commonly manage and retain foreign currency bank accounts, which then create monetary assets, which require retranslation. So I think at least some consideration as to whether such an example would be useful. And the only other point I was going to raise is I think the NPO community would be very appreciative of a bit more guidance, maybe again in the implementation guidance, around how to distinguish when an effect of a foreign currency change is actually properly included as a foreign exchange gain or loss, or when it's properly included as an other gain or loss. I sort of have a sense of that distinction myself, but I think a little bit more guidance about how to to help NPOs to distinguish between those 2 things, which make complete sense, would be really helpful. Thank you.
Thanks, Yen. Yeah, I think we are going to have to think quite carefully about implementation guidance and illustrative examples, because there is a lot here. Any immediate comments from TAG members before we just walk through those key recommendations on slide 4? Yeah, Jeff.
Yeah, I had a quick question. Just so the ED, as I read it, is illustrating option 1 right now, but the paper here is recommending option 2, which I support. So are you going to be revising the ED, I'm assuming, or is there? I mean, we could, if there's time. I mean, I'd be happy to quickly re-review it, when it's ready. But I'm assuming the ED would have to change.
Yeah, I already have drafted an option 2 version of the ED as well. So that's ready to go. It probably should have a review by Karen when she comes back, but subject to that, it's actually ready to be fired off. Yeah.
Okay.
And just to clarify on Sehan's request, the ED does have in the implementation guidance about 6 or 7 examples included in, although I haven't included in the one you suggested, but it wouldn't be too difficult to add that.
Okay, thanks. That's a very helpful clarification, Jeff. Should we then move to slide 4 and just walk through, box by box? And I suspect the first one will pick up a lot of the principles, but Nigel, anything you wanted to say before we just focus on that, discussing the liabilities for expenditure increases?
No, I mean, I think this is really is the heart of it, is that in option 2, rather than impacting unrestricted income for the change, then it goes back to sort of the principles of saying, well, you've got to have more expenditure. So you're not in any way remeasuring your binding grant obligation, or if it had gone straight to income, your income. What you're recognizing is a provision for an owner's contract, because you now have an obligation to spend more, and then that should be charged to expenses. unrestricted expenses, because that's where the cost will go.
Okay, thanks. So reactions to that proposal? Yeah, Freddie.
Yeah, so I was trying, picking up on that, I was trying to think, should there be did we do the test that, well, is the option one, does it actually represent a binding grant obligation, if that's a compliance obligation? And if not, that should be another reason why not to go with option one. And then on option two, is that onerous contract provision, does it make sense under conceptual framework or whatever impact/IFRS for SMEs guidance, as opposed to anything else? And again, going back to those concepts or existing guidance, hopefully that will give us, again, those boundaries that, yep, it is an onerous contract provision. So we have some, I don't know, conceptual / other basis to determine that's something that we are, either it's it's deciding on something which is relatively new, providing grant obligation and compliance obligation, just approved by IPSASB, and yet to be tested, I guess, in practice. But we have rules, and the question is then, does it then make sense that it's an onerous contract provision based on what we understand currently is the onerous contract provision?
Thanks. Jenny, to you. I'll just take comments at this stage and then go back to Nigel, if that's okay. Jenny.
Yeah, thanks. I think similarly to Freddie, I was also wondering whether this was an onerous contract provision, and I suppose maybe it's sort of which contracts are we thinking about, because we've got a contract to provide some goods or services that is, if I'm understanding it correctly, is being paid for in one currency, but we're using another currency to actually provide those services, so we end up with a mismatch there potentially. But any contracts we've got related to the actual provision of the services or goods, those contracts themselves are not necessarily onerous unless we're for some other reason. And so I think I'm sort of struggling a little bit, because the underlying costs of those goods and services, there's not necessarily anything to say that that is onerous. It's just that it's different from the amount we're now receiving to pay for it. And so I'm sort of wondering whether it's a presentation issue or whether there are things to recognize. And yeah, it's a tricky one, I think.
Any other thoughts? Just because I think, to your point, Jenny, then there's really kind of two issues here, aren't there? Is the conceptual basis here sort of onerous contract requirements, or is this actually more a presentational issue? And I think, probably there may be some, it may be worth actually going back into some of the basis for conclusions around the new IPSASB standard on transfer expenses, because certainly we had quite a lot of discussions about the relevance of onerous contract requirements or not. And so the thinking there may, that may help us on the, is it an onerous contract or not? I think there's then the separate question around the presentation point on restricted versus unrestricted. Nigel, back to you for further thoughts on this, and then I'll take Sam.
Okay. Yes, thanks. So I suppose in my way of thinking on Freddie's comments, I wasn't particularly thinking of expanding existing conceptual framework. but working within that. So I take the challenge of, is this actually doing that? And that's a fair question. One of the things I found was that as I started to draft the examples, I think some of the cases that I came up with were quite simplistic, and as such, they seemed to work. But when you then try to create a real world scenario that fitted them, then it didn't really exist. And so it's necessary really to try to define a grant case that would really give rise to that type of outcome. So, I started off in the scope of looking at ones where there really was a binding grant agreement obligation in the first place, prior to any change in currency, because that the grant had just given rise to that. And if that were the case, then if you then had you'd received income, you'd recognize a binding grant obligation and you had some conditions to fulfill to release that income, then if the if the exchange rates changed and you needed to incur more expense in order to release the income, should that somehow be recognized on the balance sheet? And maybe the answer is no. I suppose on balance, I probably thought the answer was yes. And my first view on that was that I would have remeasured the binding grant obligation, but I moved away from that and decided, well, perhaps what I would do in option 2 is I would recognize an owner's contract provision for the additional expenditure that would be incurred. If you then have a grant where it goes straight to income, would the same apply? There isn't, I guess, strictly measurable conditions other than the amount of expenditure. So you haven't got you haven't got your money up front that you received sitting on the balance sheet. So the alternative would be to say, well, I'm not going to have a balance sheet obligation, but I just know I need to spend more. And when I do spend more, then that'll just be charged to restricted expenses. So the end result, I think, would be the same as option 2. The use of the owner's contract is at a point in time when you draw up your balance sheet, if as it will always be the case, when your reporting period doesn't align exactly with the end of the grant, and inevitably that would be real world situations. And should you reflect that in any way? I know that owners' contracts are never that straightforward to decide if they exist or not. I suppose that I was drawn and balanced to it because of the alignment with the case where you did have binding grant agreement obligations in the first place. So the two were a similar approach, but I would be I can see that there's more. It's not straightforward, and there's more than one. There'd be several perspectives on that.
And I think, kind of that's probably quite a good summary, because in a sense, actually, what I'm sensing is people understand and have sympathy for the result, but the point is actually the rationale needs to be thought through somewhat more. And I think that's, again, I would go back to some of what went into Ipsos 48 on transfer expenses, because we did have quite a lot of discussion around this.
Sorry, on what did you say?
On the Ipsos 48 on transfer expenses, the new IPSASB standard.
Transfer expenses.
Yeah. That, because you've got the revenue side and the expense side which fit together on this. And I think, understanding that rationale and some of the debates there would actually maybe help in terms of the rationalization for the result here. Because I think what I'm understanding is people have sympathy for where you got to, but it's the rationalization of how we get there that's going to be important in terms of convincing, firstly, the TAG, and then the putting the proposal out, if that's what we do. I'm mindful of time, so Sam or Siam, anything else you want to say at this stage?
Don't worry, I'll take it offline.
Okay. So, Siam, are you okay if we move on then?
Yeah, it's fine. Yeah, I can also feed in via Sam,
yeah.
No problem.
Okay, so I think the income side is, in a sense, which is the sort of box over at the top right hand. In a sense, that's the flip side of what we've just been discussing. So what I'm going to do is just move us on then to the other boxes, and so we've got the scenario 3 one. Any comments on that proposal? Yeah, Catherine.
I'm going to caveat my comments by saying I'm not an expert in foreign exchange. I've managed to avoid this most of my career, so take my comments with a grain of salt. But I guess what I'm struggling with is the portion that goes into the unrestricted category. And the reason why I say that is I think there's a transparency issue when you start to bury the loss. I know that it gets sort of called out when you do that recycling through the reserves, but my personal view is that you would have a lot better transparency if the sort of the net result in the restricted fund showed whatever loss there was encompassing foreign exchange, and then you show the sort of pulling funds from the unrestricted to reserve to recover that loss. I'm quite concerned that when you start, you know, in simplistic examples, when we don't show anything else in the unrestricted fund, yes, you see it quite clearly, but when you have a lot more activity potentially in that fund, you have this gain or loss that's getting lost in there, and then you don't have true transparency on the outcome. And I think it's important that stakeholders do know that the net result of a restricted contribution was that you had a loss on that contract. So as I said, take that with a grain of salt, but I have concerns about sort of burying amounts in the unrestricted column and would rather have it all just recycling through.
Thanks, Catherine. Yeah, I think it probably some of this actually sits then in is what is the nature of those restricted items, and you know, potentially what that is sort of funds that you have that if something happens in the future, then those will need to be used for that, otherwise they go back, as it were, and that's a rather sort of, that's not a great explanation, but I think perhaps we need to just remind ourselves about what the reasoning behind designating something as restricted actually is. What does that actually mean? And that may help us then to rationalize back through, okay, your point, Catherine, which I think is really important, but also back into the previous discussion as well, in terms of what, if something hits restricted, what is, you know, is that consistent with the overall rationale for restricted, unrestricted? Any other thoughts? Yes, Sam.
I think similar to grant, the whole question of grant revenue recognition, FX, some of the complexity arises from lack of clarity about what's required from the grant agreement. Many grant agreements are vague or silent about exactly what they require. To your point about what exactly is this restriction for? Is it spend whatever money you get out of these dollars in your local currency, or is it spend X dollars? You know what? And if the grant agreement is silent, then you know that's where a lot of the energy and problems and interpretation of auditors and comes in. So something we talked about even a couple of years ago was the potential of drafting some sort of potential draft, so types of paragraph headings that should go into grant agreements. We can't mandate them, but as a sort of recommendation, put a heading, this paragraph in your grant agreement. Here's the 3 or 4 options to choose from, but then it's in the grant agreement, it's got a standard heading, and with this some clarity around requirements, which would really help. And again, I don't know where that would be published, outside impact, obviously, but it would just really help, I think, get some clarity around the numbers of different options and for NPOs and auditors to interpret what's happening.
Thanks, Sam. I mean, I could certainly see some kind of indicators of what would cause something to be restricted, and I think we'd need to think whether that's just in basis for conclusions or, but something that, would help people think that through. And it may be as simple as a default, you know, if you don't have any of these indicators, then it's going to be unrestricted because there's nothing that would cause it to be restricted. And I think that goes back into the nature of what is a binding grant agreement, because it has to have the two-way feature. So I think that's probably where we have to start off, is to get that clarity on restricted, unrestricted, and then that will play back into you know, where you can actually charge these gains and losses. Because almost if there isn't something that indicates it's restricted, then probably the default, back to Catherine's point, is it's unrestricted. So I think that's the general point, that we just need to get that clear, and then we need to work out where that might sit in the impact guidance. So I think there's probably a kind of secretariat discussion that we need to have amongst ourselves, just to get a clarity of what are we talking about here, what's the rationale, how does this sit? Because I think that's going to be one of the principles. I think that then plays into the fourth box there on disclosure of transfers. And again, back to Catherine's point, I think, about clarity, what does it mean? Perhaps I could just get any thoughts on the final grant, on the final box, which is around the nature, whether monetary or non-monetary, of binding grant agreements. Does anybody have a view on that? Because that would probably be useful for us in terms of thinking about a holistic solution on this. Yeah, Jeff.
Yeah, I wanted to understand the rationale. I think earlier on that the binding grant, I know the receivable in scenario 3 is monetary, but what the rationale was for the binding grant arrangement itself for being non-monetary. Because I mean, obviously the grant arrangement could be fulfilled with cash or with non-monetary items, or both. So I was wondering what the rationale was there.
I was thinking, thanks, Jeff, along the lines of that the binding grant arrangement obligation appears when funds have been received, or maybe the funds will be received, but they're recorded as a receivable. So that monetary item exists separately. And so the binding grant agreement is talking about the need to do some things under the terms of the grant in order to get the income. Any expenditure that is incurred, I was considering as a separate item. And so the binding grant agreement itself wouldn't directly result in a further cash flow. I know in some cases there could be a need to do a repayment, but I think IFRS does, it draws a distinction up because it's not the norm, and so it's only when you would only recognize that as monetary when the expectation crystallizes.
Thanks, Nigel. Phil, and then I think I'm going to wind us up because I know people are having to drop off. So
no, I think if you think about it from the other side as well, when you've got a grant fulfillment right, that's not a monetary right. It's that right to have the person you provided the grant to do something for you, but it's not a right, say, to receive money. That's dealt with separately if you need the refund or if something else has happened. So it is quite a complicated conceptual thing, but I think I agree with the point Nigel made.
Okay, so I think it is tricky, this area. I think Catherine's point was entirely right. I've managed to get through my professional career without really having to focus very much on this area, and so as the discussion that we've shown does illustrate, I think we kind of need to take a step back and say, what's the rationale between restricted, unrestricted, and get clarity for ourselves in that. Obviously, what the nature of the binding grant arrangement actually is as well is important. And then what's the impact when we look at these foreign exchange transactions. So I think absolutely shows why we need to do it. It absolutely shows why it's hard as well. And I think if we come right back up to those principles, that will help us go back round these. And I think if we can do that, and I think, Nigel, that's where the rest of the team needs to help you in terms of getting through that clarity on those overall principles, and then what does that mean? And I think if we go back through the examples you've given us with that top level understanding, I think that will help see whether we get to the same answer by a slightly different route, or a more clearly explained route, or whether we go back into essentially option 1 type of territory. I think there was sympathy for the option 2 approach, but I think the question is, can we get there conceptually? And I think that's probably a reasonable summary of having gone around that. So I think we need a discussion as a team, I think, when as soon as Karen gets back, and then that will we can help you move forward, I think. So with that, I think we are slightly over time, but thanks everyone for joining the conversation today. I think 2 important topics which really hit at why we're doing the guidance for non-profit organisations. Again, thank you very much to Siam for everything that you've done, but thank you also, Nigel, for what you've done to try and help us through what's a really complicated issue. With that, I think it's time to wrap up today, but looking forward to seeing your collective comments on ED1, and looking forward to our next discussion. Okay, thanks very much, everyone.
Thanks, bye everyone.
Thanks everyone.